Let me also welcome in the management of Sundaram Finance joining us on the show today. Let's just get a sense as well on how we're going to go ahead from here, what's anticipated. So now you've expected normalcy to start returning from the 20th, from September this year. Talk to us a little bit about where that confidence is stemming from, why you feel things will recover in the second half, especially given that we haven't really heard anything from the government yet, no stimulus that's been announced.
Well, I think I have to clarify, normal or normalcy, I think in today's context has to be understood, very, very differently. I think you're referring to a quote that went out. Essentially, what I'd said to those guys was that Q1 is going to be probably zero activity. Q2 always, especially for the trucking sector, because of the monsoons, Q2 is always kind of a slow quarter. So the reference to revival in Q3 was really saying that Q3 is when we might start to see the resumption of some activity. So that was the context. I don't think we're talking about a great demand coming back and all of that. It's just a relative statement to where we are today and where I expect we will be in September, if that answers your question.
Sure. Okay, let's talk about loan growth as well. Whether or not you expect that to remain weak and for how long. Have you revised growth estimates as well going forward? Give us a sense of how you see this playing out.
Yeah, I think loan growth obviously will be muted, I think, especially, I don't know about the other sectors, but certainly for those whose fortunes are linked strongly to the automotive sector, which is if you're essentially in the business of financing trucks and passenger cars and so on and so forth, we do believe that loan growth is going to be rather muted, and this is for the entire year. I talked about the first half being, pretty much very, very muted. But even in H2, I don't see, that it's going to take off in any big way. However, the expectation is that, as you briefly alluded to, there will be hopefully a package which comes from the government, which will funnel investment into certain segments of the economy, and those could provide some kind of a spur. The rural sector, as we speak, seems to be in reasonably good shape. I think we've had a good harvest, planting has been good, monsoons are predicted to be normal. So the rural sector could bring us some cheer. The government stimulus, if as expected, much of it goes into the infrastructure sector, that could provide some trigger. So there's 2 or 3 pockets potentially which could bring some life back into the economy. But I think we have to be realistic. It's not. I think now I don't even hear anyone talking about V-shaped recovery, because I don't think V-shaped recovery is realistic at all. So it's going to be slow, but then it goes back to the fundamental question, are you invested in the India story or not? If you're invested in the India story, I guess you would believe that not sooner, but later, things will get back on track. And I think that's what we have to stay focused on, all of us.
Sure. But Mr. Srinivasaraghavan, life is going to change post-COVID. Do you think that dependence of branches is going to come off quite considerably? What I'm trying to understand is that how is it that NBFCs and HFCs will go about doing business? Because people would be wary of stepping into the bank branch. There will be a lot of clauses with regards to social distancing, etc. How does life change for you in terms of practicality?
Absolutely. I'm not going to pretend I know all the answers to the questions you asked. But at a broad level, you're right. It's not going to be business as usual. We have to find new ways of connecting with our customers, which in a sense, what we're going through right now is a trial run for that, right? So it does mean that many more of our customers, especially in semi-urban rural areas, getting more comfortable with dealing digitally. But by the same token, I don't want to go overboard like some people are tending to do and say everything is going to become digital. It's not, right? I think there has to be a reasonable balance. Of course, digital will come more into play, automation will come more into play, but that does not mean that the entire world is going to become decoupled or depersonalized 100%. I mean, this virus, as terrible as it is, we will find a cure, we will find a vaccine. Things will settle down maybe a year from now, maybe 2 years from now, 3 years from now, but it will settle. I mean, it's not that the virus is going to keep wiping out millions of people year after year, right? So we will get to a steady state, except no one knows when. But when we get to that steady state, things will go back to something like what we've known. But also, I think equally to your point, digital will become a larger part of all of our realities. Our customers will have to get more used to dealing digitally. But that's fine. That's the way the world has evolved. So I'm sure we'll work our way through this one as well.
Sure. Within that, and as I see here, that you have almost more than 50% exposure to CV financing. The CV sales, we already know, have been very badly hit because of COVID-19. Not just that, the auto sector per se has been in a slump because of the economic slowdown, and now comes this double whammy. Also, there are weakening financial profile of fleet operators. There are a lot of questions about whether shared mobility is going to spring back into action, whether used cars are going to see a jump coming in. The picture is still pretty much grey. What is your own assessment, and what can be really done to try and revive the auto sector? And do you think a financial bailout really is the only answer here?
That's many questions rolled into one. Listen, and I think some of these things need to be understood within a time frame and some beyond an immediate time frame. Now, as far as mobility is concerned, yes, I've heard this said that because people are going to be wary of getting into a train or a bus, they're more likely to buy a two-wheeler or a second-hand car. And there's merit in that argument. But the opposite side of that argument is, when everything is so uncertain, do I want to go and increase my debt, right? Do I want to take on another loan when I'm not even sure if I'm going to be able to service my existing loans, right? So there's that side of the argument. The second part of it is on movement of goods, right? I mean, given the size of India, given the complexity of this geography, trucks, right, are always going to be a very, very integral part of logistics in this country. I mean, the railways do a commendable job. The freight corridors are going to open up in the next, months, years, whatever, and they will, make a big difference to movement of freight. But trucks will still continue to be a significant part of logistics in this country, especially when you're talking about the smaller centers, the villages, the last mile. So I don't think, it's all of one thing or another. I think what we will find, which is the case even now, is there are different pockets of the economy which are served by certain different segments. And to my mind, that will continue. Of course, there can be redistribution within those, right? Which is something that time will tell us as to, what makes the more sense and what doesn't. But generally speaking, I would say that we'll have to give this time. As you say, people have to get used to the new reality, the new ways of doing things. So maybe it's used car, maybe it's more of two-wheelers, maybe, it's more of small commercial vehicles doing door deliveries because people don't want to go out. So we'll just have to wait and see. I'll be very honest and say I don't have a crystal ball. And if somebody else has got a crystal ball, well, good luck to them. Because honestly, I think, and this is true, right? Everyone said this. The governor said this many times. This is truly unprecedented. In 100 years, none of us has seen anything of this magnitude. But on the other hand, again, we've lived through other crises before, right? We've been through years when commercial vehicle sales have tanked by 50%, right? And then life has flowed back. The people who were sensible hung on, and then they were able to build their businesses back. So what I guess I'm saying in a nutshell is it's not extremes of one kind or the other. It's important to understand that this is a once in a lifetime thing that we're going through. So we need to tread cautiously, but I think we also shouldn't lose our heads believing that everything is going to be a disaster, because I don't think that is the case.
Okay. So I'm going to turn attention and talk about what is your understanding of how the consumer behavior is likely to move. Right now, we had the SBI chairman on channel on Saturday, and he said, look, I don't know what will happen to the borrowers post the moratorium gets lifted. Do you see that because of this cash flow crunch, there could be a huge uptick in retail delinquencies? Every NBFC we've spoken to, they said, look, we've got bank guarantees, we've got collaterals, but in this kind of a crisis, the value of collateral also comes down.
I think simple, straightforward answer to your question, Nikunj, is yes. I think retail, not only retail, I think delinquencies in general, you must expect will go up. Now, how much they will go up, for whom, remains to be seen. But certainly, yes, I think given the cash flow strains that small businesses go through, given the cash flow strains that guys in trucking will go through, we must realistically expect delinquencies to go up, which is precisely the reason why we have been sort of representing to the regulator that they should permit a one-time restructuring, because the moratorium is only a short-term fix. It's a 3-month fix. On June 1, when the moratorium ends, it's not as though things are going to go back to normal, which is why, as an industry, when we've gone to Reserve Bank of India, we've pleaded with them saying, please allow a one-time restructuring of loans, whereby we'll be able to soften the EMIs for our customers for the next 3-6 months, and from there slowly we can step up. So that is exactly the reason we've asked for one-time restructuring. So the answer to your question is yes.
Okay. Now, Sundaram Finance has a huge legacy advantage, which means that for Sundaram Finance to go and tap capital from the market will be very easy. I mean, NBFC business is like taking capital from the first mile, giving it to the last mile. You understand this much more than anyone else. But you are in a strong position. Everybody else is not in a strong position. Do you see a general decline in NBFC lending, and this could backfire because banks are not lending, NBFCs were taking risk, some are not taking risk, and those who want to take the risk now do not have the appetite or the capital?
No, that's a fair point, Nikunj, because there is, on the one hand, not right now, but there will be a huge demand for financing, and there may not be enough people willing to offer it. But again, as I say, I think, as we move forward, models will emerge. Because, for example, a year or two ago, this co-lending was something which the Reserve Bank sort of actively promoted. Unfortunately, it didn't take off in such a big way. But I believe now, with the need for credit growth to happen, some of the roadblocks, some of the irritants around co-lending will probably get addressed. So that, I think, has huge potential for becoming a credit delivery mechanism. The second one, I think, is many of the larger NBFCs, we've already been, in a small way, we've been financing the smaller NBFCs, right? We've been doing term loans, we've been buying portfolios from smaller NBFCs. That potentially is something that can grow bigger, right? Because let's face it, even the larger NBFCs, they don't have the kind of last mile reach which the smaller NBFCs have. So I think each one of us, the MFIs, the small NBFCs, the mid-sized NBFCs, the sectoral NBFCs, and then the very large NBFCs, each of them plays a slightly distinct kind of role in the space, because as you appreciate very well, the NBFC space is a large space, right? And it's very heterogeneous in terms of asset mix, in terms of size, in terms of reach. So NBFC is not, it's a many faceted animal, really, if you like. And I think each one of us has a distinct role to play. And I think some of this collaboration, which I just referred to, and where banks also, I think over time, if they get comfortable, and this is something that we had talked about 20 years ago, of this whole concept of a wholesaler retailer, where the bank as a wholesaler, because of their enormous ability to raise resources, and NBFCs as the retailer because of their enormous ability to reach credit to the most needy and their ability to collect. So somewhere this wholesaler retailer continuum, I think, needs to come back on the table as a discussion point, and I'm sure we'll find ways to do it. Right? It's not immediately apparent as to how this will happen, but I'm sure that down the road, as we get back to some semblance of normality, some of these models will come into play, right? Because again, I go back to what I said a little earlier to your colleague. If all of us are essentially invested in the India story, right? If all the things that we've talked about for the last so many years in terms of India taking its rightful place amongst the great economies of the world, so on and so forth, if that dream is still relevant, and if all of us, or the majority of us, are still invested in that dream, I'm sure we'll find our own ways to navigate what now is certainly a very, very treacherous landscape, something that none of us has even vaguely encountered. But I'm sure as we wade through this, clarity will emerge and we will find our own models, because I think we should also, as a people, as an economy, we should give ourselves some credit. I mean, we've navigated some pretty rough stuff in the past when we weren't so strong. Today, relatively speaking, we are in reasonably good shape. So I believe, and I hope it's the case with you, that along the line we will find some of the answers to the questions you asked. That's a long answer, but I thought I should sort of articulate my thoughts on that.
No, it's important to get your perspective. It's very important to get your perspective. I'm glad you were able to really amplify your views. Appreciate your time. Stay safe, and thank you for your valuable time. Let's take a break with the news that we started off a gap up start. It's stable, but very, very early days. I would have loved to see much more acceleration after yesterday's 5.5-6% cut. But so far the update is a percent higher for the Nifty, and breadth is also looking okay.